Hello, everyone, and welcome back to ABG Investor Days. My name is Adrian Gilani, and I'm an equity analyst here at ABG, and I will be moderating the upcoming presentation. With us today, we have Sonny Mirborn, CEO at Alcadon. He will hold a roughly 20-minute presentation, and then after that, we should have time for some Q&A to wrap things up. So with that being said, Sonny, please go ahead.
Thank you, Adrian. As mentioned, my name is Sonny Mirborn. I've been with this company now for about 5 years. It's been an immensely interesting journey where I think we have created a fantastic company. Let's take 20 minutes to describe what we actually do and how we have performed the last few years. But first, what we actually do. We use a lot of data in the world today. Data is as important as, you could say, water, sewage, electricity. But in order to use that data, we have to facilitate the actual transfer of data. And for that to actually happen, you need material for that to be able to transfer the data. You need fiber optic cables, you need duct systems, you need pop stations, you need street cabinets. In our business area, outdoor connectivity, this is where we facilitate the transfer of data between cities, between areas, between buildings. To a large extent, this is enabling fiber to the home or 5G, for example. A large part of this business area is actual fiber optic cables and duct systems, and pop stations, street cabinets, and the likes. And we offer complete systems for this to happen. The other business area is indoor connectivity. This is where we started in 1988. This facilitates and enables the transfer of data within any type of premises. And basically, over 80% of the bandwidth that we use today is indoors. So this is really important. And this is what enables connectivity in a premises just like this, or a hospital, or a military facility, for example. Again, complete systems, cabinets, fiber optic cables, copper cables, outlets, plugs, sockets, complete systems that we offer. Today, the broadband segment alone is about 25% of our turnover. Data centers that forms a part of indoor connectivity is about 25%, and the rest is a mix of services, trainings, residential networks, industry solutions, structured cabling for connectivity indoors. So it's a mix of different end customers and end segments. But this is basically what we offer, and we offer solutions, complete systems, but we are talking about passive material, not active components in general. To give you a brief overview of where we stand today, 5 years ago we were present in Sweden and Norway. By doing some rather large and a couple of smaller acquisitions, we have ventured outside of Sweden and Norway and outside of the Nordics. So today our biggest markets in the UK, and the Benelux region is also growing to become very, very important for the group. This has changed the organic growth profile of the company. A lot of the large data centers being built today is happening in this area around London, Frankfurt, Amsterdam, Paris, and we are present in a lot of these data centers being built. And when we talk about the broadband markets, you can say that the UK, Belgium, and Germany are among the world's most interesting markets when it comes to the fiber optic rollouts. But I'm going to speak a little bit more about that later. In essence, we are a distributor. That means that we represent global manufacturers on our local markets. And we have over 200 suppliers today in the group. Just in fiber optic cables alone, we have 8 suppliers that we work very closely with in different markets. This is an extremely flexible approach. It makes sure that we do not miss a technology trend, but we combine it with our own brands and production, where we can facilitate customer-specific solutions for our customers. Today, we have over 4,000 customers. No single customer constitutes more than 2% or 2.5% of our turnover today. So we have a large group of customers, and I'd say that the average customers with Alcadon is a small to mid-sized installer, basically, across our countries and markets. Could also be operators, could be data centers, could be industrial companies. So it's a large variety of companies that forms our customer structure. Our NPS score of 57 is quite high. we have extremely loyal customers. A lot of them, a vast majority, has purchased our solutions on a regular basis for a minimum of 10 years. So we have very loyal customers, which we are very happy about. The same with our employees. About 15% of the company is owned by us working for the company, which we are very satisfied about. I think it's the best incentive you can get, that people from all levels of the company own shares. And when we acquire companies, we make them reinvest in Alcadon shares, and that's a really strong strategy on our side. They form usually part of the management or prolonged management team and take an active part in developing the group further. To speak a little bit about the markets that we are present in, and let's start with data centers and indoor connectivity. When we use more and more data, and the amount of data in society today is increasing with 35 to 50% every year. With the introduction of artificial intelligence, this is not going to slow down in any way. It's going to increase even further. With increasing amounts of data, we need storage capacity, and that is basically a data center. That's why you have seen companies present in this field deliver magnificent reports the last year, because of the introduction of AI and more data centers being built. We are focused mostly on the enterprise and co-location data centers, especially the small ones. So if Lloyd's or JP Morgan or Nordea are building a data center, for example, in the basement of their own building, we might take part in that construction process. Usually we are not present in the really large hyperscales. But after a recent acquisition in Ireland, we might take a larger part of the process of these larger data centers as well. There are several reasons why data storage is going to increase. But I'm going to move directly to where that's going to have an effect on us. And basically you say that in the UK and in the Nordics alone, data center investments are expected to increase with about 10 to 25% a year for the next few years. We have seen several sources that says the same. When we started really focusing on this in 2020, we grew with about 40% the first year from low levels. The year after, we grew with 35%, and we still see a very strong growth rate in the data center field. When it comes to structured cabling, which enables connectivity in any type of premises, which is basically products that you need in an office space like this for connectivity to work, there you can say that even if you look 20 years back or expected growth rate 10 years going forward, it's about 5 to 7% a year. So it's not these fantastic growth rates, but it's a very stable base to stand on for us. Broadband or outdoor connectivity. This is an important area for us. It's 25% of our turnover. And this area has been severely hit by increasing interest rates the last year. A lot of the rollout that we have seen in countries like the UK or in Denmark or in Germany has halted significantly. And you see some of our peers in the market that are even more focused on FTTH have really experienced this. But there is an inherent need for fiber optic cables. So it's only a matter of time before the rollout will start again. And we are a rather small player in several countries, so we have not experienced the same drop as many other players have. In Belgium, for example, we had a growth the last quarter of over 200%. So if you are a small player, you can still grow quite rapidly. But as you see, in terms of broadband subscriptions, the maturity is vastly different in different countries. And among the fastest growing and most interesting countries globally today, you have UK, Germany, and Belgium. And we are present in all these countries. And we are considered one of the leading players in terms of product assortment, in terms of solution portfolio in this field. So incredibly important markets. And there are several reasons why this growth should continue. We have a sustainability trend in switching copper for fiber, which is very important, of course. The 5G deployment that we have, I would say that we have hardly seen it yet. We have seen it a little bit in Sweden, a little bit in Denmark, to some extent in Germany, but Belgium is a country now where we really see it, and that's supporting our growth. They are beginning from a really low level when it comes to FTTH or fiber to the home broadband. But they are starting their 5G deployment at the same time. And 5G requires 2 to 16 times more fiber than FTTH. So it's an incredible amount of fiber that we see are being rolled out in Belgium right now. And of course, over the long term, you have construction activity, population growth, data growth, technological development. All of this supports new fiber being rolled out or additional fiber being rolled out over time. In Sweden, for example, do you know anyone who doesn't have a broadband connection? Hardly anyone knows that. Still, over 30% of the investments needed to reach the government targets by 2025 remains. 25% by now. Sorry about that. But for us, FTTH is extremely important in Sweden alone, and it's new projects coming all the time, because some of the fiber we rolled out 20 years ago needs to be replaced, or you need to roll out additional fiber. So it's a very interesting market for us. I want to dig a little bit deeper into our latest acquisition. This is a typical acquisition that I think that we will be doing going forward. We have about 1.6 billion SEK in turnover, and this is a company with slightly above 10 million euros in net sales. Very profitable, high margins, a very, very strong cash flow. Their EBITDA over net working capital is over 100%. Small company, focused team of, I think there are 17 people, really focused on the data center and the indoor connectivity segment, and they've done a fantastic job over the last 15 years. It's a company that we know extremely well. They have been working for 12 years with our British company. That's how we got in contact with them. So this is what we like. We know the company. We've been trading with them for a long time. We've got personal connections. We share suppliers. We see non-invasive synergies. When you put a lot of companies together that are in the same vertical or the same field, you don't need cost synergies, because they are going to create a lot of value just by being together and being able to talk about new products, new solutions, shared customers, and the likes. We acquired it at a reasonable multiple. So we acquired 100% of the company. It had a positive EPS and cash EPS effect from the onset. We did quite a detailed memo about this and sent to the market. The earnout, extremely well balanced. I can hardly see any scenario where this will not be a cash flow positive acquisition. So we tied basically the earnout to not only EBITDA growth, but also cash flow and margins, to be able to make sure that we can draw up several scenarios where we will still have a positive cash flow from this company. The value add, primarily, I would say, being in Ireland, this is where the decisions on which material to be used for the large data centers across Europe. Large American companies come to Ireland to choose an installer and choose material. The installer follows the construction of the data centers to Sweden, Finland, Frankfurt. That's where the choices are being made, and we have the products for it. Would have the products for it, but we can strengthen them considerably. And they wanted an outlet to reach the European market. So for us, it's a perfect strategic acquisition. But on a pure financial viewpoint, it's a very strong acquisition for us and our shareholders, we believe. Seen over a longer period of time, one of our main targets is to grow 20% a year. So far, supported by both organic growth and acquired, we've grown 32% a year. We're quite satisfied about that. One target that we have not reached is our EBITDA profitability of over 10%. I think we ended up on 5.4% in Q1. Now, important here to understand is that the majority of our markets are already on, above, or slightly below our EBITDA target. But we have a couple of markets where we are growing rapidly, and we have to invest in OpEx, which affects the markets. And we are growing very rapidly in these markets, above 100%. I think in Germany we grew with over 40% in the quarter. In the Benelux area we grew with over 200%. So you got a large share of turnover affecting the whole group with a lower operating margin. So that affects us, of course. And the higher interest rates have affected our sales in mature markets like Norway and Denmark, particularly I would say Denmark, where we lost a lot of turnover. But it's not lost forever. The FTTH or broadband rollout will continue again. It's hard to say when, but in most markets we have had a very positive view from our customers when it comes to Q2 and going forward this year. So we think that it's only a matter of time. And meanwhile, waiting for the broadband segment, we still have the data center segment growing very, very rapidly. So we're happy about that. In terms of leverage, after we've done the network center acquisition in the UK, which is now 40% or over 40% of our turnover, a huge acquisition for us, we were quite leveraged. We were shortly almost at 4, I think, in net debt EBITDA, which is quite a lot. But we were never scared about this because we had a plan and we have followed that plan. Now it's, I think, excluding IFRS 16 or the leasing, it's 1.9. So I'd say we have a very strong balance sheet, and the last 18 months in total, we've had a very strong cash flow. So I urge you, take a look at our report, follow the free cash flow per share, for example, and you see a huge impact that we have had during 2023, for example. I think we increased cash flow per share, operating cash flow per share by almost 300%. So it's a huge impact. During the last 2 years, a lot of companies in our business had problems with inflation. We have problems with the supply chain disruptions. Inflation is generally not a problem for us. Short term, yes, 1 month, 2 months, but we can pass on price increases. And we have shown historically that within a quarter, we have been able to maintain our margins. We are very satisfied about that. Supply chain disruptions, on the other hand, very difficult. We had to build an inventory. In some aspects, some of our suppliers came to us and said, you know what, we have 9 months lead time. How do you respond to that when you're growing 200% in some markets, and some markets are stable at 0% growth? You never know what you're going to do. We build an inventory, and that helped us maintain our market shares. Now we don't need such high levels of inventory anymore, so we are reducing our inventory levels, and that's basically why our cash flow has been extremely strong for the last year or so. That's basically what I had, Adrian. You probably have a few questions. I saw one slide was missing about the Q1 report, but
that's no problem. We can take some more general questions than the Q1 report. I'd like to dig into the acquisition model a bit. You mentioned some of the strategic things you look at when making acquisitions, and you talked briefly about synergies. Could you perhaps expand on that? What concretely are you talking about, and can you give some examples of synergies?
You could say that we're looking at non-invasive synergies, basically not cost synergies when we acquire a company in a new country. But since we acquire companies within exactly the same field, we share suppliers. Sometimes we are missing a supplier in some country. For example, we had it's called blowing machines that are blowing a fiber optic cable. They didn't have that in the UK. They couldn't find a proper one. So we had a Swedish manufacturer that we launched all over the group. We had French Legrand, huge company within the data center segment. We won a very nice prestige project with them in central London. And they were so satisfied that they said, can't we do this across the whole group? And we said, yeah, in all countries except Norway, it's very suitable for us because we already have a similar supplier there. So we launched this product portfolio all over the group, and we already get some very interesting projects because of that. So we are helping each other on that side, and also on our own brands. I mean, it's our own brands. It's copper and fiber optic cables. Sometimes we can use the same suppliers, and we can drive costs down and increase profitability. We can share inventory. You got a lot of these type of synergies that we see in our acquisitions.
And in terms of the product categories you're looking at, a few years ago, people weren't really talking about data centers. The focus was perhaps more about fiber to the home. Now that market is in a slump at the moment, and data centers is doing better. Would you say that the focus has shifted, or are you equally focusing equally on both those areas as well, still?
I'd say when the broadband segment or FTTH segment was going like this, a lot of investors criticized us and said, why don't you do a large-scale acquisition in the US with the biodynamics, with the large fiber optic rollout occurring there? You should do that. And we said that we want to maintain a balance. Data centers, structured cabling for commercial properties, and broadband. So we choose the best companies that we find, and hopefully they are present in all 3 fields, or at least 2 of them, because then we can add something. But we have focused on data center segment when nobody else did, which has given us an extreme head start in our business. But also the broadband segment. I mean, don't count it out. I'm sure the growth will be fantastic. And as we see in Belgium, we see it in Germany, huge volumes being rolled out over, we're talking about 10 to 15, sometimes 20-year projects. So it's a very nice portfolio of projects we have there.
And even if you now didn't go into the US, you have still made a geographic journey as well, going from a mainly Swedish and Norwegian company to now a pan-European company, you could say. When you look at the geographic split today, are you sort of happy with where that's at now, or are there markets you would like to add to that as well?
We have a few other geographic markets that we're looking at. It's not a must for us. We have plenty of nice acquisitions to do in our existing markets, where we can perhaps sometimes also find cost synergies. But for us, it's more about finding the proper companies. The US, we have looked at it. We have found a few interesting companies, but I'd say it's easier for us to expand to Austria, Finland, Spain, France, northern Italy. We have a few areas where we are still in a blind spot. And not to say, just in the UK alone, we could probably find 10, 15 nice acquisitions if we just started looking more deeply. But we do 1 to 2 acquisitions a year at a maximum, so we don't need more than that.
I understand. And perhaps digging a bit into your profitability target, you were quite open with saying that's the target that so far has not been reached. It sounds on you like scale is going to be one important aspect of reaching that. Is that going to be the main driver, or are there other levers here to sort of inch up the margins over time?
You can say this is the targets over a business cycle, and during our Capital Markets Day in September 2022, I believe it was, we launched this target, and we said that we don't expect to reach an EBITDA over 10% before 2025. I think it's still doable that we can do it by 2025, but it's scale-driven, and it's mostly the Belgian and the German market that needs more scale, because we are ramping up OpEx there. And we're reaching a limit now where we can continue to grow with the same organization, but you need a minimum amount of people and a cost structure that would support growth, for sure.
And if we focus perhaps on the current year, with the different product verticals that you have, what's the best outlook you can give if you were to give your best estimate on how should we think about the fiber market for this year? Should we see a recovery? Will the strength in data centers continue throughout the year?
I would say that for sure the data center segment will continue to grow. I think the commercial property segment will continue to have a stable growth. Not in the high range of 10 to 20% for sure. When it comes to the broadband segment, I think that we will see basically all of our markets coming back to growth during this year, but it's very difficult to say when. We've had positive signals from Germany, from the UK, and these are the 2 most important markets for us. So if that happens, and we do expect it to happen, we're going to see a very positive impact for sure.
And when growth has slowed in some of the areas you're active in, you, as you mentioned, have instead been able to increase efficiency and get out more cash flow instead. Is that sort of, have we seen the impact of that efficiency, those efficiency improvements, or is there more ground to gain on things like working capital management? And
what we said during last year was that when growth has started to slow down in several markets, we are going to be more efficient in our net working capital management. And we see that the supply chain disruptions they're presently not there anymore. On the contrary, we have a lot of manufacturers with excess capacity. So I'd say that we will be able to continue to increase our net working capital efficiency, but we are slowly reaching the limit now. So perhaps 1 or 2 quarters more, we will see a more efficient handling of that. But besides that, I cannot promise anymore. We had a huge boost in our cash flow the last 12 months.
Yeah, I understand that was quite exceptional.
Yeah.
One final question from my end. You've fairly recently announced that you will be leaving the company as of October. Can you just talk us a bit through that decision, and if or if not that will have any operational or strategic impacts on Alcadon in a more long-term sense?
Yeah, sure. I think that during these, 5 years is a long time when you have this position. That is one thing that one has to remember. But we built a fantastic company. I've got plenty of shares in the company now as well. I intend to keep those. You could say that we now have structural capital in the company. So it's substantially more stable than it was 5 years ago. We have a very strong management team. I'd say, and being very open with that, the only thing that could be paused a little bit are new acquisitions. because I'm certainly not going to do a large-scale acquisitions a few months before I leave the company. That has to be left for the next person who takes over. But we have planned for this the last 3.5 years from the board's perspective and from the management team's perspective. And we are very, very decentralized. So each market, each company have their own strategy, their own management team. The only thing handled by 2 people in group headquarters, myself and our CFO, it's basically acquisitions. And then it's more capital allocation issues. So I'd say that with the right person coming on board, and I trust that we will find someone who's very suitable, I think the company can develop and continue this journey for sure.
Perfect. And I think that's a great point to wrap it up on. With that being said, I'd like to thank everyone for listening in, and thank you to Sonny as well.
Thank you.